One of the biggest lies banks tell us is that our money grows in our bank accounts. The truth is, while the number in your account might increase slightly due to interest, it doesn't grow in real value. With inflation soaring and bank interest rates lagging far behind, keeping cash in the bank is effectively burning a hole in your pocket. To combat this wealth erosion and build intergenerational wealth, consider these 5 assets that have historically proven to be better and safer stores of value than cash. In fact, we're going to provide you with 6, as the last one may come as a shocker. Mother Nature. Mother Nature has given us some of, it not the best investment opportunities in raw minerals. Yep, you guess it. Gold, silver, and platinum. The primary reason money is considered valuable is its function as a store of value for the future. However, governments continuously print more money to finance deficits, constantly risking the devaluation of the paper currency in your wallet. This is why financial experts recommend investing in something truly valuable, scarce assets that can't be easily created. Precious metals like gold, silver, and platinum have served this role for millennia. They consistently rise in value when inflation spikes. For example, before the 1950s, an ounce of gold cost around $400. Today, that same ounce is priced well above $2,000. Some forecasts even suggest it could reach $10,000 by 2032. While cash loses purchasing power, gold tends to appreciate. You don't need to buy physical bars to invest. Gold ETFs, exchange-traded funds, are affordable investment vehicles that track the price of gold, allowing you to gain exposure without the hassle of storage. Industrial commodities and raw materials. Beyond their scarcity, precious metals possess inherent utility value, making them indispensable. Silver is critical in producing electronics, medical equipment, and nuclear reactors. Similarly, metals like cobalt, nickel, and copper have massive industrial demand due to unique properties that are hard to replicate. The demand for cobalt, crucial for electric vehicle batteries, has skyrocketed since 2020. Its price rose from $20,000 per ton in 2012 to $40,000 in 2022, a 100% increase in a decade. For the average investor, buying and storing raw materials isn't feasible. Instead, you can invest in stocks of mining companies like Rio Tinto, mining-focused mutual funds, or derivatives to gain exposure to these high-demand phases. Safe haven currencies. In a world of fiat currencies no longer backed by gold, geopolitical stability is crucial. This is why the wealthy often park money in Swiss banks. Switzerland's strong economic system offers stability, making the Swiss franc a sought-after safe haven asset during global turmoil. During the 2008 financial crisis and the 2009 Eurozone debt crisis, massive capital flows moved into Switzerland to escape currency depreciation. More recently, during the Russia-Ukraine crisis, the Swiss franc was used for international trade, bypassing U.S. sanctions, causing its value to surge. While opening a Swiss bank account isn't for everyone, retail investors can use currency ETFs and forex brokers to gain exposure to stable currencies like the Swiss franc, British pound, or Chinese yuan with a relatively small amount of capital. Sovereign guarantees. Look closely at a US dollar bill, and you'll see the words, "This note is legal tender for all debts, public and private." Since the end of the gold standard in 1971, the dollar's value has been backed by the full faith and credit of the US government. In plain terms, your money is only as stable as the government that backs it. Investing in this sovereign guarantee is a classic way to preserve value. Governments are typically the last to default, as a national default would be catastrophic. The safest way to invest in this guarantee is through government securities like US Treasury bills, notes, and bonds. These typically offer better returns than bank savings accounts and are backed by the strength of the US economy. Small investors can buy them directly via the Treasury Direct website. Value stocks and mutual funds. While government securities are safe, their returns are often lower than the stock market. For investors seeking higher returns without extreme risk, value stocks are an excellent option. Unlike growth stocks, for example tech startups, which are riskier, value stocks are from established companies with strong fundamentals and steady demand. They provide stable price appreciation and reliable dividends. Researching individual stocks can be time-consuming. A great alternative is dividend-focused mutual funds or ETFs, like the Vanguard High Dividend Yield Index Fund. These funds offer an affordable and diversified way for retail investors to tap into the income-generating power of value stocks. Land and real estate accountants classify land as a non-depreciable asset for a simple reason. It's scarce and always in demand. We need land for homes, agriculture, commerce, and industry. This constant demand makes it a powerful hedge against inflation. Bloomberg research shows that U.S. housing prices tripled between 1992 and 2020, despite a major dip in 2008. While owning a home is a common goal, investing in real estate shouldn't be limited to your primary residence. You don't need a fortune to get started. Real estate investment trusts, REITs, are like mutual funds for real estate, allowing you to own a share of commercial, residential, or healthcare properties. Alternatively, purchasing a rental property can generate income that covers the mortgage and builds equity over time. Collectibles. Remember I told you the last one who'd be a shocker? Well, this asset class includes vintage cars, rare art pieces, luxury handbags, limited edition watches, and even first edition books. Unlike a regular car that depreciates the moment you drive it off the lot, a rare collectible can become more valuable with time. In 2022, a 1955 Mercedes-Benz 300 SLR Uhlenhaut Coupe sold for a staggering €135 million. In 2017, Leonardo da Vinci's Salvatore Mundi sold at auction for $450 million. The rich invest in these items because they are timeless repositories of value. For average investors, platforms like Whatnot allow you to sell rare collectibles like comics or baseball cards. Others, like Rally and Masterworks, even enable fractional ownership of high-value assets like classic cars and fine art, making this exclusive market more accessible.